What's going on, everybody? Michael Silva here. You're watching the Stock Market Brief Show. Today we are talking about the stock market's next big move. At least we're going to try preparing for it, forecasting for it. We're going to get right into it today. I want to first call out some things that are taking place. The market, one, has been on a monster move to the upside. We know that. The market has been seeing intense volatility. We know that. And we also know that the market has to digest at some point. Now, is the market going to fall and collapse all the way to the floor? I don't know. Is it going to pull back nice and slightly and potentially rise from that for another leg higher? Potentially. We're going to discuss those possible scenarios in today's episode. I want to first call out this right here. So if you're new to this channel, make sure to subscribe, like the channel. If you're into technical analysis and intermarket analysis, this is an inside look. I'm going to be giving you an inside look into the Patreon group that I have. So this is Patreon. It's $9 a month. Just do it annually. It's $90, so you don't need to pay monthly. You get access to my Discord. My Discord is where I post everything: swing trade ideas, weekly expected moves, watch list. Which, by the way, if you're in the Patreon right now, my watch list will be updated a little bit later today because I added some new names in there. Now, if you're not in there, it's okay. I'm going to actually be giving you some stuff from there today. This right here is the weekly expected moves for this entire week. So it has the spiders. I track all these products. And I just want to call out that there is a lot of volatility, in this next week ahead. For example, just look at SMH. We're looking at a plus or minus $10 move, right? So if you want to know what the high level is there, what the low level is, pay attention. And I'll show you why these are so important momentarily. Take a look at the SPX. It's a $104 expected move. The SPY is a $10.50 move and a $10.50 move roughly for the Qs as well. A couple other big ones is take a look at Netflix, $18 expected move. Tesla, almost $17 expected move. Again, and Nvidia there too. And even Microsoft, a $10 expected move on the week. Okay. I also post the zones. If I don't list it on here yet, I haven't done that yet, but the zones are right here. I'm not going to get too much into this, but this is a very helpful risk management tool. It allows you to see where price is within these bands themselves. As far as some of the trade ideas go, I'm going to go over some now because I want to just start with these trade ideas that I've actually recently shared in the Patreon group, because there's a lot of stocks that are actually setting up very nicely. And this is what we need to be aware of. So stocks that are, roughly around 52-week highs, or stocks that have been on a run and that are pulling back. So for example, here's one right here. This is Lamb Weston, consumer staple product, where we saw this big gap up. Most likely this was around earnings, I would imagine, on this big gap up. And you can just see here how price is just stuck right under this $100 pivot. You can see a low, a higher low, a higher low. So all we're doing is seeing contraction, right? So we see expansion, and now price is coiling up very tightly. So if we get a move above this pivot of 100, we can see an explosive move, and it would be nice to see it on some big volume. So there's a lot of stocks like this setting up. There's here's another one, Wabash National Corp, this an industrial name. Notice here how it was, a very strong move out of this little base right here. Boom, we moved up, and now we've just been consolidating here, and then we contracted right here, and we broke out through it with some strong volume, as you can see. And now what we're doing is doing a subtle pullback. So these type of setups are all around the place right now, which leads me to believe that even though that, there's a lot of negative things going on from the macro environment, and it could very well affect a lot of these names later on, you just got to look at price action as it stands currently. And there are some really good setups for those that want to be long individual names and so forth. Now, we'll get into very specifics of the S&P 500 momentarily, but right here you can see prices pulling down to that 20-period moving average, potentially flagging, and really this is just back testing a previous breakout area. So maybe it can come here, and if we start seeing some strength, it might come take another run back at 30, which is, around a, $3 per share gain, and potentially even more if it continues to go. Now, why is there so much volatility right now in the markets? Well, right now, the catalyst for that volatility is inflation, right? So we have inflation rate year over year and core inflation rate coming out on Tuesday, the 14th, so Valentine's Day. We will see if it's going to be a lovely Valentine's Day or it's not going to be that great, because there are some indicators also turning around. This was last week's expected move. This is why expected moves right here, right? So screenshot and look at the levels and map them on your screen. I like to, just for those that don't know, I don't mark all these down. I mean, I track all of them, but I look at the pretty big volatile ones, like the big names over here, and then I look definitely at the SPYs, Qs, IWM, and I will set alerts. Somebody asked me that in the chat, do you set alerts? I set alerts on the ones that have higher volatility typically, because I like to trade those intraday, and I also like to swing trade those type of names like the SPYs, the Qs, and some of those names in here. Now, if we take a look here, this was last week's expected move, right? We came all the way down, we tagged that lower expected move, and we kind of found some support from it. Take a look here intraday on the Qs. This is a 2-minute on the last trading day. You know, in the Patreon group, I was just calling out that it was approaching the lower weekly move, or my alert went off and it was there, and you can see it tagged it right at 916, right? This was 916 right here, and look at what happened with price, right? Price started to move from it. That's not always the case. Sometimes it comes down, which actually creates sometimes good opportunities to potentially play it back up into the expected move, because remember, 68% of the time, you know, it closes within there, and this is all about probabilities. It's all, you know, about finding high probability setups. So that was a pretty interesting. If we take a look now at the S&P 500 as far as the weekly expected move goes, it'll take us up back to around that 4,200, which we've been calling out for a while now as a prior area of supply, right? So resistance or supply, it was resistance, and, you know, resistance was probably once support, right? So support then can become resistance and vice versa, you know, so, resistance can become support, support can become resistance. Over on the downside right here, it's just under 4,000, and I want to call out what that might look like on a pullback here. So if we look at the SPY on a daily time frame, we're measuring it from the fib extension level from this low to this peak high, and we're kind of looking within this golden kind of zone up here. This is the 50% retracement to the 61.8 retracement. So if we do get a hit to the downside, look for that year-to-date anchored VWAP to get tagged. It's very similar to right here, right? So if you go back to this episode over here, it closed underneath it, and we said what? We said in order to be bullish, you need price to close back above there and get above that high. And if that's the case, the bulls are back in control. And as soon as we did that, what took place? Well, we moved up, we pulled back, we moved up, we pulled back, boom, we exploded. So right now, from a year-to-date basis, the bulls are still in control. We're above that year-to-date anchored VWAP. Now, if we pull back down into this area, that would bring us below the year-to-date anchored VWAP, which can be potentially become a level of resistance. But there are also some very interesting confluences of support here. And this is what I want to prepare people for if the market starts pulling back, right? Because if it gets hit to the downside on CPI, you know, this was hit to the downside on CPI right here. See this big move right here, right? We gapped down. It was like, oh, game over. And then all of a sudden it closed up here. And that was a bottom. So far, the bottom right now, you know, in the stock market there. But we'll see if it's, you know, a temporary bottom or if it's the all-time bottom. We don't know. We'll know later. Okay, so as far as confluence goes, if price were to pull back here, I'm just mapping out this and preparing us. Not to say that this is going to happen, but if it comes here, that's right around the year-to-date. It's at the lower year-to-date anchor VWAP. It's at the kind of golden zone here, 50% retracement level, 61.8 from this move, and it's at this lower trend line that's previously holding as support. Okay, another thing to look at though is if you zoom out and you can see this is the SPY on the daily time frame. This trend line, right? We broke out of it, and what would happen if price pulls back into that 50% retracement level? Well, take a look. It brings us under the year-to-date anchored VWAP, but it brings us in confluence with this channel support that's moving to the upside, right? And then also this downsloping, you know, back test potentially right into here, along with the 50% retracement level. Okay, so I'm mapping this out now because if we get hit to the downside, or if you're shorting, right? If you're shorting the market and you're looking for potential areas where like, okay, well, where would shorts maybe cover, or where would be good to take some profits off, right? It doesn't mean that it can't break down through here and start crashing, right? That's always a possibility too. But that would be the level that I'm paying attention to. So that 391 to 396, the lower weekly expected move is 397.60, okay? So if it gets outside of that, it could present itself an opportunity to potentially play back up into the lower weekly expected move. Now, if we take a look at the SPY overall, right now it's kind of like, hey, if you're a bull, you're kind of on vacation. Why? Well, it's because we are below that 5-day moving average and it is starting to decline, right? So right now I just call this more neutral than anything because we haven't really, I mean, we've had a high, a lower high, a lower high. We had a low, we had a lower low, okay? So now let's see if it kind of holds and then starts breaking down further, potentially bear flagging and so forth, okay? Now, if we look here, this is the summation index. The summation index did tick over on the NYSE. The NYSE has a very strong correlation with the IWM, so I want to point this out. This could identify a potential change in trend, right? So right here was a change in trend, right here and right here. And what did we do, right? We went up, we came down a little bit, and then we turned back around and gave us the good side to go bullish. And now we're going here, right? So now we're pulling back. It might have more, steam to the downside. We don't know, but we can be back on, bulls can come back from vacation when we start seeing a positive turn back up through that. And when I look at the IWM, because of the strong correlation between the NYSE and the IWM, this bear flag right here, it is in a downsloping channel. And this, if we get hit harder to the downside, a full measured move would take us to the lower weekly expected move in the IWM. So that is one thing that I want to call out there. And you can see here, the 5-day moving average, it was inclining, and now it's starting to hold as a level. This is kind of how we drew it out prior, right? You'd want to see it, start acting as a resistance, start turning back down, and then it opens the door to short it. And now we're below it, right? So the bears are in control on the shorter term time frame. If you want to be more bullish, you want to get above this 5-day period moving average and potentially break up above this trend line to start heading higher and potentially tag that upper weekly expected move around 196. Now, the NASDAQ summation index, it looks like it's going to turn over. It has not done so yet. So it's giving us the early sign of a potential change in trend as we called out prior, right? So this was a turning point to the upside. This was a turning point to the downside. This was a turning point to the upside. Now we're potentially turning over, which could indicate that we have to consolidate through either price to the downside or time, just sideways. And if I look at the Qs, on the 15-minute time frame, we started breaking down from this channel. This could be very well flagging over here. We're below the 5-day moving average. So if you are bullish, you want to see these levels get recouped, okay? That is what you'd want to see as a bull, right? The 5-day moving average, it is still trending up, but now it's starting to turn. And we talked about that, right? With the, high, lower high, and then it cracked down through this area. We haven't really had a back test yet. And then we could see something potentially like that from a more bearish standpoint. Now, I also want to call out a couple other charts that I don't really talk about. So the Dow Jones Industrial Average, this is a bullish, I would consider this to be a pretty bullish consolidation. And if you pay attention to this prior day's candle, we gapped down, but we finished almost up 50%. So, a piercing type pattern on this last day of the trading day, and we're kind of just, sloping right under this pivot. So if we start breaking up through here, that could be a positive sign where we could see another leg, higher potentially to around 36, 35.5, right into this prior area of supply move to the upside. So that could be potentially pretty bullish for the Dow Jones Industrials. We are, we broke out of this downsloping trend line. We back tested it, which we have not seen on some of the other products. We moved up, we put in a higher low, we moved up, and now we're kind of consolidating, right? Remember, expansion leads to contraction, contraction leads to expansion. That could be to the downside, could be to the upside. But what we like to see here is volatility contracting, and the reason for that is because it allows for better risk to reward opportunities. The last chart I want to close off is the NASDAQ composite. This is obviously a broad market product too as well. And you can see, 2023, it's been a year of just boom, so far just in one straight channel. And now we're starting to see some consolidation, right? Through price coming down, through time, right? It's going to the side. Could be very well flagging or back testing this breakout area, right? We had prior area of support. We had it turn into resistance, and now we're coming back into this potential area. I will call out, I'm starting to see the MACDs starting to curl over on a lot of these products. Not only this one, but the S&P 500 too, and this could identify a potential churning point in the markets where we saw a move down. Can we see a potential another leg down? These are all possibilities that can very well be taking place. And as I've already stated, we are seeing a lot of positive looking setups in the market. And that would be one heavy fake out, to see nice big old, consolidations, and looks like it's going to start breaking out again, but then all of a sudden gets hit to the downside. It looks like it's going to break out, but going to get hit to the downside. So as always, we need to look for good opportunities in the market that offer up low risk to potentially high rewards. And the way that I'm doing that now is if we start getting hit to the downside, I'm looking into this area for a potential area of support in the S&P 500, because if the S&P 500 gets hit, if the NASDAQ composite gets hit, and you have some individual equities or stocks, chances are those can also get dragged down by these other large index products. So be careful, be safe. Hope today's episode gave you some insight into potentially some next big moves taking place in this market. See you later.